Okay, morning everyone. Looking at the US stock market, the Dow continues to trend higher following the recovery above the 25,000 psychological level. The breakout pullback and the continuation pattern was being established as the Dow continues to inch higher. And on overnight, we did see the Dow has once again trended higher for the third straight session and also uh, managed to break out above the previous resistance around the 26,600 points all-time high, which was recorded back in January this year. With the Dow closing at a fresh record high level, we could expect further recovery on the or further upside on the Dow Jones towards a new high, which is around the 27,000 psychological level. That will be immediate resistance for now. In the meantime, the 26,000 will serve as the immediate support level on the Dow Jones. Gains on last night or overnight, whereby the Dow has gained about 250 points or 1%, was mainly underpinned by a series of stronger than expected economic data, whereby the jobless claim fell to its lowest level since November 1969, whereas the manufacturing data came above expectation in uh, August. Similarly, on the S&P 500, we did saw the S&P 500 has breached above from the recovery above the 2700. Subsequently, it breached above the 2872 and forming the short-term breakout pullback just towards the EMA 20 level, and the continuation pattern was being established as the S&P 500 has also closed at a fresh all-time high level. For now, we could expect further upside for the S&P 500 towards its next resistance located towards the 2950. That will be the immediate resistance for now. In the meantime, the 2875 will serve as the immediate support level on the S&P 500. Some updates on the crude oil prices. The crude oil prices has earlier recovered from the 64 US dollars barrel level. Since then, it has faced some of the rejection along the 71. And recently, we are seeing some of the two-day recovery on the crude oil prices. But on yesterday itself, we did see the crude oil prices has pulled back, falling about 0.6% after US President Donald Trump has urged OPEC members to ramp up their production. So for now, we need to continue to monitor for the 71 level breakout until we can see a breakout and a closing above that. Only we can confirm for further recovery on crude prices back towards the 75. In the meantime, the 67 will serve as the immediate support level, followed by the 64 US dollars barrel mark. The good thing on the crude prices right now is that the uptrend in tech orientation formation has been established. The MA 20, 60, and 120 has been in line since the past week. Okay, some of this on the local front. The FMKLCI has again recovered from the 1660 level, forming a double bottom formation. Since then, we did see the W-shaped formation breakout as the key index breached above the 1700 and also above the 1800 psychological level. And recently, we are seeing a healthy breakout pullback just towards the EMA 120, which is around the 1780, and a potential continuation pattern for the FMKLCI. So tracking the gains in Wall Street overnight, we could expect further recovery on the FMKLCI as the key index could be of trading back towards the 1830. That will be the immediate reasons for now. In the meantime, the 1780 will serve as the immediate support on the key index. On the lower liners wise, is also on a good recovery phase after a sharp pullback from the 15,200 points level. We are seeing a good bargain hunting activities on the FM small cap index all the past 4 to 5 trading days. For now, we could expect further rotational play among the low liners back towards the 14,560 points level. On stocks wise, some of the stocks I can watch out for would be heavier. Hevia has staged a recovery from the low of the 68.5 cents level. Since then, price has been rejecting along the EMA at 120 level. But the good thing on Hevia right now is that we are seeing a potential higher low formation since the past a couple of months, and recently we are seeing Hevia forming the breakout pullback and a potential continuation pattern as price has recently staged a short-term breakout above the 89 cents level, accompanied by some of the mild improvement in volumes compared to the previous last 2 weeks. For now, we expect Hevia to trend towards the 80, sorry, 92 cents level. That will be the immediate resistance for now, followed by the 96 and a half cents. The 96.5 cents will serve as the short-term resistance, followed by the 1 ringgit and 6 cents. Your stop loss point will be located below the 85 cents, and if you can take further risk, the final defense will be located towards the 81 cents level on our Hevia board. Everything appears to be quite positive right now. As you can see that the RSI has already risen above the 50 level, whereas the MACD indicator appears to be crossing above the signal line as well. Only work group, price has again recovered from the low of 84 cents. Subsequently, price traded towards the intraday high of 1 ringgit and 16 cents, 17 cents level, forming the double top formation along the 1 ringgit and 17 cents. After hitting the recent peak of 117, we are seeing a healthy pullback on our Only World Group, and subsequently, price has recovered over the past a couple of days. For Only World Group, we need to see further recovery above the 1 ringgit and 6 cents level to see if the price breach above that. We could see further recovery on our Only Group to trend back towards the 1 ringgit and 17 cents, or even towards the 1 ringgit and 28 cents level. Your stop loss point will be located towards the 1 ringgit 99 cents, followed by the 94 cents level on Only Group. Should price breach above the 1 ringgit and 6 cents, we could expect the MACD indicator to issue a buy signal, whereas RSI could be recovering back above the 50 level as well. On EcoWorld International, price has then recovered from the recent low of 89.5 cents level. Since then, price has staged a strong recovery towards the 1 ringgit and 15 cents. After touching the 1 ringgit and 15 cents, we are seeing a healthy pullback on EcoWorld International back just towards the EMA 60 level, EMA 120 level, and subsequently the uptrend in depth orientation formation was being established. DMA 9, 20, 60, and 120 has been in line since then. And on yesterday, we are seeing a good recovery on top of the EMA 120, and prices from the short-term channel formation breakout above the 1 ringgit and 8 cents level, accompanied by some of the improvement in volumes being traded. Following this channel formation breakout, we could expect price to head back towards the 1 ringgit and 15 cents. Once the 1 ringgit and 15 cents level were to be breached, further upside will be seen for EcoWorld International back towards the 120. Your stop loss point will be located below the 1 ringgit and 3 cents level. So the first target price is at 1 ringgit and 15 cents towards the 120. Stop loss below 1 ringgit and 3 cents on EcoWorld International. On Formosa Prosonic, price has been continues to trade on a sideways manner, but recently we are seeing some of the higher volumes being traded over the past 2 months trading period as price lingered along the EMA 120 level. For FPI, what we do now is we're going to monitor for this potential triangle formation breakout. Should price breach above this symmetrical triangle above the 1 ringgit and 45 cents, we can trade FPI towards the first target price at 152 towards the 1 ringgit and 65 cents. Your stop loss point will be located towards the 1 ringgit and 35 cents level on our FPI. Should price breach above the 145, we could expect the MACD indicator to issue a buy signal, whereas the RSI has really risen above the 50 level since price has already formed the bullish candle yesterday. Last two company will be Lumbo Group. Lumbo Group has again recovered from the low of 13 cents after a sharp pullback from the high of 27 cents from its share split. Subsequently, price are traded on a sideways manner over the past couple of months. But recently, we are seeing some of the good recovery pattern on Lumbo. accompanied by some of the improvement in volumes as price retested the EMA 120 level. For now, we need to monitor for the breakout above the 16 cents level. Should price breach and also close above the 16 cents, then we can trade a Lambo towards the first target price at the 18.5 cents or even towards the 20.5 cents level. Your stop loss point will be located below the 14.5 cents if price were to breach above the 16.5 cents. On indicators wise, everything appears to be quite positive right now. As you can see that the MACD indicator has been forming the higher high and also the higher low formation. Last company for today will be Pohot. Pohot, earlier we did mention for the breakout above the 1 ringgit and 40 cents level. So on the next day itself, it did not breach above, it did manage to gap up, but it closed back towards the 140. But on yesterday itself, we are seeing a good bullish engulfing candle was being formed on Pohot. So for now, we expect price to continue to trade towards the 148. Once the 148 cents level would be breached, then this could be the potential W-shaped formation breakout that we're expecting price to trend towards the 155. Your stop loss point will be located towards the 135 level on Pohot. Following yesterday's bullish candle breakout above the 140, we are also seeing the MACD indicator issuing a buy signal, whereas the RSI has recovered above the 50 level as well. If you have any questions, you can put in the chat box and I'll reply you shortly. There's some question here on firstly is hibiscus. Hibiscus has earlier hit the recent high of 113 cents level. Since then, we are seeing a heavy, just a one-day sell down and subsequently price traded on a sideways manner. So, with the absence of a follow-through selling pressure and price recovered above the EMA 60 level, we are taking this as the healthy breakout pullback and the continuation pattern for hibiscus firstly to trend back towards the 113. Once the 113 level were to be breached, further upside will be seen for hibiscus towards the 1 ringgit and 17 cents level. You can use the daily EMA 9, which is currently located at the 1 ringgit and 2 cents as your trading stop loss point. And if you can take further risk, the final defense will be located towards the 95.5 cents level on hibiscus. The uptrend inter-orientation formation is still valid on the hibiscus right now, so you still can hold on to hibiscus as price has been forming the higher high and also the higher low formation throughout this period of time. On Binacom, price is still trading on a sideways manner following the recovery on top of the 35.5 cents level. So for Binacom, what we do now is we're going to monitor to see if price could breach above this short-term trend line, which is currently located at the 45 cents level, 44.5 cents level. If price were to breach and also close above the 44.5 cents level, then only we can see further recovery on Binacom back towards the 47 cents or even towards the 50 cents level. Your stop loss point will be located below the 41 cents level on Binacom. If price fails to cross above this 44.5 cents and we pull back, then we might see further consolidation on Binacom over the longer term period. Since there's not much volumes being traded right now on Binacom, the price is likely to trade on a sideways manner until we can see some of the high volumes being traded on Binacom. Yongtai is still on a downtrend of formation following the pullback below the 1 ringgit and 30 cents level. Since then, price continues to trend lower. For now, if you're holding on to this counter, any recovery from now will be just taken as the selling the strength strategy, similar like here. Any recovery towards the EMA 9 early on will be taken as selling the strength strategy. For now, for Yongtai, any recovery towards the 93 cents level will be an opportunity for you to cut your losses or trim your losses before the next pullback rate to resume. So for Yongtai, if price were to violate below the 78 cents, then you have to cut loss immediately. while any recovery will be limited towards the 93.5 cents level for now. If there's no further question, then we'll end the morning briefing for today. Thank you.